Multifamily Mindset
podcast. Think bigger.
Welcome back to the Multifamily Mindset podcast. I'm your host today, Zach Rucker, and I am super excited about our guest today. This person that we have on has been really was my first mentor getting into real estate. So I'm super excited to share him with all you listeners and get to know a little bit more about even my journey into this. Really came from this person that kind of helped me get started and showed me the ropes a little bit. And with that, it's Joe Rinderknecht is our guest today. Joe, thanks so much for taking the time to jump on and share your story with our listeners. And I'm super excited because I love hearing what you're doing in your journey, and it's always inspiring me to keep moving forward and keep pushing and get out of my comfort zone. So thanks so much for jumping on.
Yeah, thanks, Zach. I appreciate it. Those were some nice things you said. I don't know if I was ever a mentor. I was on my own journey as well. So we were walking down that path together. So
That's right.
yeah.
That's right. But that was the fun part about it.
That's right. Yeah. And it's really cool to see like where kind of we started back in, when was it? Like 17?
Mm-hmm. Yeah, back in 17.
Going to school at USU together. You were part of the real estate club that I had started, and then we started getting more into looking at multifamily deals together, and got into Renatus, right? As an education company, and yeah, it's been good.
It's been good.
Road.
Yeah. So tell the listeners who's Joe. Who is Joe for all of our listeners out there?
Yeah. So for those of you who cannot see me, I wear a cowboy hat. It's my MO. It's who I am through and through. Grew up farming and ranching in northern Utah. And so a lot of my values in business and real estate come from what I learned on the ranch of, working hard. Your word is your bond. And taking all those into real estate and making sure that your, communication is good with investors, and you do exactly what you say. One thing we've won deals before because we've called sellers out and be like, hey, listen, we're going to do everything that we've said we're going to do. We expect you to hold your word to us. And we've won deals because we've called sellers out in that way. Right. So really big on kind of those values. And so fast forward to now, I don't do a lot of the farm and ranch stuff, doing more of my own little homestead, if you will. It's kind of a buzzword these days, as Zach and I talked about like 20 minutes prior to this call.
That's right.
Or to the recording. But now we're really focused on, my focus is on essentially two different things in the world of real estate, mainly multifamily, right? We are very focused on buying like 20 to 100 units along the western front of the U.S. So Montana, Idaho, Utah. We own assets in all three of those states and are just looking to expand our portfolio. Most of our stuff is smaller, right? Like we just bought a 54 unit in Missoula, Montana back in September. Right now we're under contract to purchase a 48 unit in Boise. And so we're actually also we've been bidding on some 100, 200 plus stuff, but like our bread and butter of what we know really well is in that sub 100 unit range, and brokers are now reaching out to my partner Levi Allen and I, because we have about a decade under our belt of building that credibility, right, with brokers that we can execute and do what we say we're going to do, get deals done, and we don't ever retrade either. So that's kind of one side of what the business do. We run and operate everything that we purchase here locally, essentially in our backyard. Everything in our backyard is like a 4-hour drive. It's crazy. Like last Tuesday, we had our building inspection on Boise. I got up at like 4 a.m., drove to Boise, did the inspection for 6 hours, drove back that night, was back home by 8 o'clock. That was a long day. That was like a 9-hour round trip drive, right? But that's what we like to get on site quickly if needs be, and be boots on the ground. The other side of the business that I do is I have a fund as well, where we've mainly done multifamily, we will raise capital for others' deals. We'll partner with people who are really good at what they do. They're vertically integrated. And right now we're building that into more of a asset agnostic cash flow fund. So we've mainly done multifamily. We've done a couple of custom home builds. We're looking at right now some like venture capital opportunities, some businesses. The other kind of buzzword out there in the world right now is your trades and your service-based businesses. It's kind of the boomers, right, are at that
Yep.
age. They don't want to be a plumber. They don't want to be an HVAC guy. They don't want to be a landscaper. And so we're looking at investing in, those kind of businesses as well. And really anything that we can get some pretty good cash flow on, we're really looking at, because, Zach, as you're in the multifamily space too. What we're kind of seeing right now in the market, right, is either somebody's like already what they call like pregnant multifamily, like they've invested so much in multifamily, they're ready for something else. So that's where we like to kind of hit on what those wants and needs are from the fund, because a lot of the stuff we do is higher rate, short term stuff. But also, as we know, people that invested in 2021 that at the top of the market, like there's so much money tied up in deals that they just don't know, like, are they ever going to get their money back? Are they going to get distribution again? We just don't know. And so we're trying to, like, on our multifamily stuff and like the fund, think of like what's happening in the market. What are investors experiencing right now? Today, investors are experiencing their returns in their Cushman Wakefield, not Cushman, that's a brokerage, the Charles Schwab accounts, right? Their stocks are tanking right now, so
Yep.
looking at the whole scope and figuring out how can we pivot, and provide a good service and investment opportunity for our investors. So that was kind of
Nice.
a quick one too.
Yeah. That's awesome. So kind of two sides to the business, not necessarily fully all in on just like that fun investing into your deals, but having that as investing into other deals. I think that's a kind of unique kind of situation that you don't see too often, of you're operating your own deals, but then you're raising money for other people's deals outside of that. I think that's a unique kind of setup that allows you to, I think that's really a smart position, because then you get to see how these operators that are really good at what they do, how well they operate, and you get to see a little bit inside, their
Yeah,
their business and their organization, and then kind of bring that back to your business in a way, right?
that's totally true. Yeah, and I actually,
Hey everyone, Clinton Orr here with iProtect Insurance and Financial Services. We are thrilled to be returning to Peak Partnership this year. At iProtect, we specialize in multifamily insurance and risk management, helping investors across the country maximize profitability for nearly 15 years. Through strategic risk management and strong carrier relationships, we make sure your investments are protected and optimized. If you're looking for an insurance quote or insurance pricing per door on a deal you're underwriting, or essential risk management resources to help keep your investment secure, visit our website, ratemap.org. Let's connect and make your property safer and more profitable. Looking forward to seeing you all at Peak Partnership.
and I'll give a couple reasons why we've done the fund of funds. It's more than just that, because lifting up the hood of their operations essentially and seeing how they do reporting and financials and K1s and all of the inner workings with construction and whatnot. Like, you do get to look at that, which is super nice for an aspiring operator who wants to become vertically integrated, right? And so, like with the multifamily stuff, we won't deploy capital with anybody who isn't vertically integrated, right? Because we want the safe stuff. Granted, like there are a couple sponsors that like everybody trusts who are, they have deals foreclosing right now, but it's not necessarily their fault. It's just the market, right? It's just bad timing. But I started the fund back in 22. And if we, go back to that time, I had bought a 1951 24 plex in Brigham City, Utah, that was a massive, massive renovation, right? And that property got to a point where like my partners and I, and more specifically myself, just because I lived closest to it, like I lived at that property like 3 to 5 days a week, and I wasn't getting paid. I didn't have a job, or I just quit my job to buy that property, and the ship was sinking, and so we had to show up every day to make sure it didn't sink, kept it above water.
Mhm.
So I started the fund because I was like, one, I'm sick and tired of operations, and I'm ready to just trust somebody else with money and to make
Okay.
money for me while I deal with this. And so that was one of the reasons why I was like really started looking at like how can I do more like debt, right? Because I don't want to be
Mm.
an operator. Like I'm already strapped.
Yeah.
And so that's where like the fund to fund structure came into play, where like I could raise a bunch of money for somebody else's deal that was vertically integrated, great track record, right? And be able to make money from that while I was focusing on keeping this deal alive, right? That was, the first thing, that was the first reason why we did it. But then also, I'm always kind of more of a long term visionary as well, like the whole begin with the end in mind. And so, again, I've always wanted to have a vertically integrated business with my apartments, with my apartment acquisitions. And so, yes, being able to lift up the hood of these guys that have a couple billion in assets under management, you know, and understanding their operations and getting paid to do it was like, all right, this is cool. Let's run with this,
Yeah.
you know.
Yeah, that's
And
sweet. I like that. Like you just it came out of a necessity, but then also just grew into this um, multi-purposeful reason to set up the fund and go the fund of funds. And like for our listeners, a lot of our listeners are new trying to get into multifamily and get started. And a lot of them are trying to figure out that piece of, okay, well, how do I, get into deals? And what are ways to do that? And some are like, well, I'm going to raise capital for deals, and or I'm going to try to find the deal, right? There's the different avenues
yeah,
to get there. I would say all are difficult. It's just a matter of which one do you want to pick
right,
and dive into it, right?
yeah,
But that fund of fund models is a good point that you bring out. Can you explain a little bit? Don't go into too depth. We don't want to like confuse people too much on that piece, but
yeah,
how do you as a owning that fund get paid to operate that when you
yeah.
get into deals?
Yeah, I can. There's typically two different ways, and I'll high level. So we did the very first deal we did was with Rise 48. They're based out of Phoenix, and essentially, if you're a retail investor, you have 50K to invest with them. They're going to give you a 7-pref 70-30 split, right? And so I'm also a part of another community called Avestor. They are a fund administrator. They're the ones that helped us set up the fund of funds, and so it was their relationship with Rise 48. And so we were able to negotiate terms with Rise 48 that if we brought over $500,000 to the table, then we would get an 8-pref 80-20 split,
Mm.
right? So we raised 710,000 for that first deal. And so we brought in, I think it was 7 investors to raise that 710, right? Which each of them individually would have only got the 7-pref 70-30 split. So what we did is we gave the investors the full 8% pref, but then on the back end, my team and I will get the 10% on the
Mm.
performance split. So we took a very small um, fund manager fee. It was like 1.25 points up front for raising that money, which is like it's like 7 grand or something, which you know that's not a ton, but we'll get paid a lot more on the back end. And so and then we're just strictly LPs, right? We
Mm.
bring one check to Rise 48, and then we manage all of our investors on our back end. The other deal that we did in Ohio, we're more of a kind of like a co-GP. I'm
Okay.
not going to go into a lot of detail on that because co-GP is getting really hammered on right now by the SEC. because you cannot be compensated, right? This is a pretty good disclaimer for anybody that is looking to get started in this and raise capital. Like, even though I have a legitimate 506c fund that, is a Reg D filing through the SEC, like, even me raising capital for a deal that I don't have other responsibilities in is a violation of SEC guidelines. So you cannot take like co-GP shares of a deal only for raising money. You have to have other responsibilities,
Yeah.
right, within that deal, right? And so we do have other responsibilities with the Ohio group. Therefore, we were able to get that co-GP shares. But just so everybody knows, like, make sure you don't go and try and get co-GP shares, act fee, and all that just for raising capital, because if you get caught, it won't be pretty. And
Yeah.
so even though we're a newer fund, like, we want to be 100% SEC compliant from day one. I've heard a lot of smaller operators say, "Oh, we're small, we're not going to draw any attention by the SEC." You're correct until an event like now happens, and there's a lot of investors who are suing,
Yeah.
right?
Yeah.
Because the inevitable, the worst case scenario is happening, right? And so now these small shops are now being, SEC is looking at them and asking questions. It's just
Yeah.
better to cover your bases from day one and do it right,
Yeah,
right?
and I do want to like highlight that because I know a lot of the new investors in the multifamily mindset are looking to focus on like raising capital, and the big stress is they want to get the GP shares.
Yeah.
But
Oh, I know. We've
um,
both been there, man. We have both been there.
yeah, yeah, you want that slice, like you want that slice of the pie. But like I want to talk about that benefit of setting that fund up to get LP shares. That
Yeah.
still plays a big benefit, right? To the fact that you get, a lot of people want the co-GP shares because they want an inside look on a deal, and they want to be a part of a deal. You can still get that, right, from your LP share position because you see it from the reporting standpoint. You still have that relationship with the operator, so you can get some inside looks and some learning, get to learn through that process from the LP side, and you stay more compliant on that deal and not worry so much about potential SEC issues in the future. You kind of keep
Exactly.
yourself safer, right?
Yeah. The biggest difference, right, is like you don't have any decision making. And truthfully, no sponsor is going to give you any decision making if you're just getting started. Like, I've been in it 10 years, and like I don't want to have any decision making responsibility on Rise 48. Like, they're $2 billion AUM, right? Like,
Yeah, let
sure, I
them run it.
value, but like I'd rather just stay on the LP and stay in my lane, you know. And the other thing too that I'll mention, Zach, is I've talked to a couple of your students, and I know that one thing that you guys teach is to like stay in a couple of different markets, right? Get to know the market. And that's why
Mhm.
like we're so focused on Montana, Idaho, and Utah, is we feel like we have an uneven, or is that what you say? Like, we have an advantage, I feel like, in this market because we invest and operate.
Yep.
But like, I wanted to understand Texas, and I want to understand Ohio, and I want to understand the metrics there, but I don't have to know it fully to invest there, right? So
Correct.
that's the
Yeah.
nice bit of the fund, is like I can get in deals outside of my core markets through the fund and get to understand those metrics, so that in the future, if I want to expand, I have, really good relationships with those sponsors that I can partner with now,
hmm
you
Yeah.
know. So
No, I love that. I love that because you're right. Like it's what I stress to the students is, yeah, stick to what you know. And if one you don't want to invest where you're at, maybe you're in California, and so you're kind of forced to look outside. Okay,
yeah,
pick one market, start there, get to really know it. But once you do that, yeah, feel free to expand, but utilize resources. And so you did that. You utilize a resource, a sponsor, very experienced sponsor, vertically integrated, and invested with them from an
yeah,
LP standpoint, with your fund, or even gotten into the GP shares uh, outside of your normal markets to learn that market. I think that's excellent advice to take and to have that opportunity to learn, because it's a lot of work. It's a lot of work to learn a new market and the ins and outs of it, and to even get you don't really, you're at a loss, right? You don't have that competitive advantage when you're not local to that market. And I mean, I see that struggle because, my group, we look at outside of, I mean, we want to look into Utah in Idaho, but I mean, you understand the struggles a little bit of that, looking here locally and just
Yeah.
the, how pricey it is. So we kind of force ourselves to look outside as well and look into different markets.
Yeah.
But the not being boots on the ground piece, does hurt that. And that's something you just got to consider with that. So, I mean, that's a great point. I love how you highlighted the investment side of it. The LP piece is another benefit to utilizing that to get into other markets.
Yeah. Or just find a team like you have, right, Zach, and add value to another sponsor and, makes
Mhm.
it easier for you to get into those other markets that you're in.
Correct. Yeah.
And
Yeah.
yet you're completely, right on with like Utah and Idaho. They're expensive and it's not as cash flow heavy as some of these, the Sun Belt states and whatnot. But I can tell you, like, our appreciation is pretty dang good, and like, there's a lot of benefits to investing here locally if you can make the numbers work. So,
Hmm.
um,
Yeah.
one thing I'd like to mention too, Zach, like for all your listeners, because you mentioned something like a lot of people, like in your program, are trying to figure out like how do they fit in, like how can they get into a deal? Do they raise the money? Do they find the deal? Something that really helped me from getting started, and you'll probably remember this is something that we learned from Renatus is, and I've kind of taken it how they taught it to how I like to interpret it, but there's essentially five things you need to get a deal done, right? And I'll quickly go through those. So there's these five things, right? The broad things that if you can bring one or two of the five things, you can typically get a deal done. If you can bring one or two, you don't have to have all five. Find somebody who have the other three or four. And this is really good for a beginner to understand because as we get into this, we're like, okay, I want to buy that 20 unit. Okay, but that 20 unit is 200K a unit. So it's a $4 million deal. And I got to go sign on the loan. I've got to bring, 30% right now. So 600,000 plus acquisition fee. So I got to bring 1 million roughly, got to have the credit to get the loan, but I don't know any property managers and I've never done this before. And then you get all in your head, analysis paralysis hits you, and then you don't do it.
Hmm.
Right.
Yeah.
So essentially those five things, which are what I just said in that little scenario, is one is time to go out, find the deal, to hustle. Right. Number two is knowledge. Have you done this before? Do you know how to underwrite? Right. Construction. Like that's what's really helped me is like I have a background in construction. So that's really helped as well. So what knowledge do you have to add value to a team? Relationships, right? That can be with property managers, lenders, brokers, insurance, legal, all the things you need, the whole team that you need, right? Number four is credit or credibility, right? Because a lender is going to look at both. They want to know your credit score. If you can get not even a recourse loan, right? Your credit, like on one of the last deals that I did, my credit went to crap because of that deal in Utah. So I didn't get to sign on the loan. So therefore, I didn't get
Mm-hmm.
as much of the deal because my credit was crap. But I had a
Mm.
partner who did have it, right?
Yeah.
So, and credibility, they want to see how much experience do you have. So, the more experience you can put into a team, the better typically your rate is, right? That you can
Hmm.
get from a lender.
Yeah.
And then number five is money, right? So if you can bring one to two of the five, so time, knowledge, relationships, credibility, or money to the table, like you can assemble essentially the other three or four needed to get a deal done, right?
Hmm.
And the biggest thing too is that I fell into this a lot. Never do a deal just to do a deal, and keep an abundance mindset when building a team. There was a kid that you will probably remember, Zach, when we were going to college. I will not say his name, but like he was not team focused. He was all me, 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 and like he did a lot of deals, but like he was one of those guys. And everybody has their own path. Like I don't ever want to be a self-made millionaire. I want to be a team-made millionaire.
Mm.
So
I
have
love
an
that.
abundant mindset about that. Find that team to share, that $100,000 act fee with, or whatever it may be, right? Because you can go further faster with more individuals. So I hope that
Yeah.
helps, some of the listeners, kind of give them like, I was talking to a cousin the other day, and it's like, he lives in this small town, knows a lot of people, like knows everybody. I was like, dude, you should go buy some apartments. He's like, we don't have that kind of money. I was like, guess what? I'm buying this deal in Boise, and I'm probably putting 30 grand into it. Like, I don't need to have that whole 2.85 million that I need to raise in my pocket to go do it,
Yeah.
right? Like, I have the people, I have the
Hmm.
money connections, right? I know how to raise money,
Yeah.
So
Yeah. It's being
don't,
resourceful, right?
it is, you gotta be
Yeah.
resourceful and
Yeah.
flexible.
Yeah, resourceful. Yeah, and then have that abundance mindset to want to partner with people. And I've jumped on calls going over deals, and people want my team to sponsor it, and then we start talking about GP percentage, and the it's all in negotiation, but they fight for more and more because they want this higher percentage, and it's, well, let's go over the things that you're actually bringing to the table and where you land on that. You've never done a deal before, you don't have the experience. You can sign on the loan, because maybe you do have a net worth you can bring to the table. Awesome. But you don't have the experience that the lender requires, and you've never operated a deal. So, see where, like, yes, you get value, so you get to be part of the deal, but don't try to fight for a ton of that,
Yeah,
because you are coming in to learn that, and it's about sharing, right?
yeah,
And as a sponsor, you're not trying to be greedy and say, well, no, I'm taking the whole deal. It's There's a lot of work that I think a lot of people don't realize that goes into it. Right. Like you
yeah.
said, like you're in your Brigham City deal, like you're there 3 to 4 days out of the week because of it took a lot more than I'm assuming you guys expected, right?
Oh yeah, it was way heavier of a renovation than we ever expected, and I think that came with inexperience too.
Hmm.
We thought we had enough construction experience on the team, thought we had budgeted enough money, and I mean, it's a 1951 build, man. Like, there's gonna be skeletons behind the closet we just didn't account for, you know. Like, we budgeted literally, like, and I'm okay talking about this. I'd rather be fully transparent about my experience than be like, because there's people who have lost money on deals and they're not going to talk about it because it taints their reputation. They feel like it taints, but for me, I'm like, I want to be as raw as possible. I
Yeah.
want you to know that we budgeted 1.5 million. Dude, we paid a little over 3 million in renovations.
Wow.
We bought that deal for 2 million, and we put 3 million into it. And most people will be like, "Wow, you bought it for two, and you sold it for 6.25." Yeah, isn't it great? And everybody's like, "Oh my gosh, you made so much money!" But that's no, like, we put 3 million into it, and then investor equity was 1.25 million. We broke even, man. When we sold that deal in September of this last year, we were able to give our investors 100% return of capital, which was still a win because we know guys who've only given 50% back, or it's a total wash, right?
Hmm.
Uh, where was I going with that? Where are we going with that, Zach? I forgot at the beginning of where that was going.
Just the just the inexperience sometimes, or the
Yes.
uh, yeah,
Yeah.
not actually being prepared, or not knowing what potentially all the work that goes into a deal.
Yeah.
That's where,
That's right. That's right. Yeah.
yeah. I mean, thanks for sharing that. And that, I mean, I remember talking to you about that deal last year at some point, and you're just like, yeah, we need to offload this and just, you know, call it a win that we got our investors' capital back, and move on to the next one. And we learned a ton from this, right?
Oh
I
yeah.
mean, it's a huge learning experience, for sure, that you get to take from that, and operate better on the next opportunity. And yeah, definitely a win that you kept investors' capital during a time that a lot of people haven't been able to do that with some deals lately, for sure.
Yeah.
So yeah,
And
it's all a learning experience, every deal.
it is, and I think there's a good lesson there too for new people getting into this, is that, like, the reason we were able to give her 100% return of capital is because we showed up every day.
Hmm.
It would have been really easy to let that deal go to bankruptcy and to foreclose and just be like, dang it, sorry guys, dang, it didn't work out. But, like, I had family money in that deal. I had money tied up in that deal, and Like we did have to do a capital call, but even on deals that are tough like this, like one of the investors has now invested with me twice since that deal, even though it didn't go as planned, it went bad. Like he's invested a significant amount of money with me just because of
Wow.
that trust that we were able to build as we were going through the crap,
Yeah.
you know?
Yeah. The
So,
transparency, right? The transparency that I'm sure you communicated with your investors going through all that.
yeah, that's right.
Yeah.
That's right.
Well, I
And
mean, sorry, go ahead.
yeah, go for it.
I was just gonna say there. I mean, there's just so many learning lessons that you shared, and it's been really interesting to learn about your experiences and what you've been able to share with our listeners. And um, I know I definitely want to have you come back on the show again. We can re-record some more of just like your journey, right? We didn't even dive into that. We just dove right into the multifamily aspect we love it so much. But I think we'll do another episode sharing your journey, your story, because I think you have such a special story that will really impact our listeners. And uh, I mean, your story impacted me too, in getting to where I'm at. And we didn't even dive into that, which is okay because I think we covered a lot for our listeners, but there's so much more behind, I think, our conversation that we could have for sure.
Cliffhanger.
Yep, cliffhanger for sure.
Round
But
two.
yeah, we'll have another one in the coming months. But I do end with three questions. I call them the think bigger questions. So I want to dive into those just with our time here. The first one is, how do you choose to think bigger?
How do I choose to think bigger? Um, it's an interesting question. How do I choose to think bigger? I Again, kind of like what we've talked about a little bit earlier. I've always been kind of a long-term visionary,
Hmm.
and so I would first tell you to read the book, The Magic of Thinking Big. It's a great place to
There you
start.
go. Yeah.
How to choose that, but I've always had the mindset, like even when Zach first met me, I was doing small multifamily duplex, fourplex stuff, and I remember, and this is crazy, like this is part of the journey that we didn't talk about. Between 2015 and 2018, I drove semi while I was going to college at USU to get my finance degree. I had a 6-month-old kid at home, and I was still doing real estate. And I remember I had just bought a fourplex in Tremont, and I remember telling my partner, Darren, one day I will own apartment complexes, because somebody else has done it. Why can't I? Like, I know I'm
Hmm.
driving a semi right now, but I think, and then I think that's a good answer to the question, like, how do I choose to, think bigger is it starts today and looking at where you want to be 10, 15 years and believing that you can do it,
Yeah.
right? Like if Joe Biden can become president, like why can't you be a multimillionaire, right? Sorry, I should throw political stuff out there, but um, if somebody has done what you want to do, why can't you?
Yeah. Yep.
And
Exactly.
read the book, The Magic of Thinking Big.
Yeah, that's perfect. I love that. I love that answer. No, it's great. I mean, I just knowing you, I just know you've always thought bigger too. I think that's a big piece, especially the multifamily mindset relates a lot to just, I think you and I in that realm of, we love real estate, but then mindset has always played a huge factor in that, right? Of
Really?
just,
Yeah.
spending that time, that money, and going and really developing our mindset. And I
Yeah.
think that's pushed the limits to thinking bigger. And now it's, I think that question is, it really comes easy to you to what you're thinking. Because I know you are thinking of these bigger things in the future, because it's more
Yeah.
natural to you now, right?
I mean, it is natural, it still gets tough. Like that thinking bigger is always evolving too.
That's
Right now,
true.
like, how do I take down a 250 unit and come up with 500,000 of earnest money? Like that was a conversation today. I'm like, I don't freaking know.
Yeah,
We'll figure it out.
we'll figure it out. That's right. We'll figure it
And
out.
one thing I'll say, like multifamily mindset, right? That's the company name. Like I
Mhm.
would say nothing else matters if you don't have the mindset,
Yeah.
right? That at the end of the day, like we're on the reason we're on this journey, the reason to even make money Like money doesn't make sense. It doesn't matter if you're not trying to become a better version of yourself. And that comes from mindset. And like
Yeah.
my son just got done wrestling, and what we found like really helped with him at 8 years old, wrestling tough kids is like, who are you wrestling today? It doesn't matter who the kid is, what his name is, you're wrestling yourself.
Mhm.
Who are you competing against today? Yourself.
Oh,
Doesn't
I love
matter
that.
who or what the situation is. Anyway, on to
Yeah.
question 2. Sorry.
Yeah. No, and that kind of goes into question two. The second question is, how do you define success?
I think a lot of people would say like buy money in the bank and
Hmm.
assets under management in the multifamily. Like, sure, that is a KPI, sure, that you can track. Um, like I look at myself of who I am today versus who I was, in 17. And, I'm living what I prayed for back then. I'm living that dream right now. And so I think that's a great way to define success, and just being very grateful with where your current situation is at, even if it's kind of a sad path or a sad kind of world you're living in right now. Like, be grateful for that, because you'll get out of it and you'll look back at that. Like, as you know, I've had many times in my life where I got kicked in the face, and I was busted up and wheelchair bound, and those were tough times, even in the moment. But looking back, like, you know persevering through the tough and becoming who you want to become is a great definition of success. Because
Hmm.
have you ever heard like the epitome of hell is when you get to heaven, you look at who you could have become versus who
Yeah.
you are, right?
Yeah.
Like, you're not looking at the mansion, you're not looking at the Bentley, you're not looking at the money. Like, all of those things amplify who you already are.
Yeah. Oh, I love that.
So we
Yeah,
just
that's
got to remember that, because we can get so tied up. Like, if we're paycheck to paycheck, and I've definitely been there. Like, you got to keep that vision of who you're wanting to become, because just focusing and chasing the money, when you chase money, it runs away from you. Chase who you want to become.
yeah, there you go. I love that. I love that. That's perfect. Um, last question is, what is your best advice you can give a new multifamily investor, someone that's trying to get into this and be an operator? What's your best advice you can give them?
Yeah, I would definitely follow the 5 things. You need to do a deal, do a self analysis, find your strengths, and find people who complement your weaknesses. And the last thing that I'll say, which is probably be for the next episode, is I took a pause from buying any apartments from like 2018 to 21, because I went to work for people who were doing what I already wanted to do. Right, I went and worked for a commercial property management company to learn that side of the business, and then I went and worked for a couple operators around the country, learning how to find deals, underwrite, do due diligence, all the way to dispo, the full cycle of the deal. So find that person that, and mind you, when I did the property management, is a an 80 unit LITEC section 24. I only got paid
Oh,
24K a year, right? It's nothing. I did it for the experience,
yeah.
right? So find somebody doing what you want to do, and go, if you can, do it for free. Go add value
Hmm.
to that person. And that has paid me more than the financial that I, from the financial gain,
Hmm.
and I've always had that mindset, because I did that as a kid training horses. Like, I was going to be a big horse trainer one day, and I went and mucked out stalls and rode colts to learn how to be a performance horse trainer.
Yeah.
It'll
Yeah. I
come
mean,
back
it's,
someday,
it's,
and
a,
I
yeah.
haven't.
Yeah. I mean, that's honestly, that's I would say it's not necessarily the easiest, but, it is definitely a way to learn is to, follow the people that are doing it, right? Like we said, follow those people and learn from them. And I have a very similar kind of piece there that I've kind of followed. I think follow a little bit of that journey there of just learn from others. And that's whether it's you're doing it for free or very cheap, or you even pay them to teach you a little bit and give a little bit of their time
Yeah,
to learn the ropes a little bit faster and to get to where you want to go. Sometimes you take that risk.
And then full circle to the beginning of the conversation, the more knowledge you gain, like you want that code GP? Great. Go get the freaking knowledge. You know,
Yep.
I'll tell you a quick last thing that my grandpa always taught me growing up, and it's translated into real estate. When you have a brand new colt that you're training into that performance horse, like every time he learns something new, he can jump a ditch, he can fence a cow, he can rope off of, he gets valuable more and more that he learns, right? So you may have bought him for $1,000, you might sell him at 10, right? It's the same thing with us, right? Can you learn how to underwrite? Can you learn how to property, like like if somebody wants to add a shiz ton of value right now to operators, go learn asset management, how to manage a property manager, how to manage construction. Like that is the not sexy part of this business. Go learn that and you'll add a tremendous amount of value. If you want code GP, go learn asset management. That's my last 2 cents.
Yeah, I love it. Well, thanks so much, Joe, for being on. Again, we're going to record another one just because we have to, because we need to dive into the backstory of just your journey and how we kind of came across paths there and share that with our listeners. I know it'll be impactful. So again, I appreciate you jumping on. Listeners, if you like this, please like it, share it with others, and listen for us to come back on here in the near future with another episode with Joe. But with that, we will see you guys next time.
Multifamily mindset. Podcast. Think bigger.